Hello everybody, welcome back to the channel. My name is Domenico. Today we're going to be discussing how much money you need to get started in the stock market as of now. Before we get started, if you do enjoy the video, don't forget to leave a like. It really helps out with the YouTube algorithm to get my videos out there. And if you do enjoy, don't forget to subscribe and click that notification bell so YouTube lets you know when I post new videos. I first started getting interested in stock market investing at the age of 15 in 2016. To start out, I was basically reading annual reports, quarterly reports, and just seeing how the market functions in general. I would search up definitions of stuff and learn how companies work, how public companies operate, and all the rules and regulations surrounding the stock market, and basically how you can make money from it and what stock market investing actually is, what all this means. And this is what basically I'm trying to do with the YouTube channel, is trying to teach you guys the same thing that I was looking for when I first got started. Now, when you're first getting started, basically the most important thing is knowledge. The most important thing you're trying to get is knowledge of how the markets work and how to find great companies that you want to invest in for the long term and what strategy you want to use. Not everyone is going to want to be a long-term investor. Some people want to be a short-term trader. Other people want to day trade or swing trade. Every person has to find their own type of strategy. And for me, this strategy was long-term investing. I first started off reading everything I could find about Warren Buffett, and basically I would read everything, I would watch all his conferences, and this would just teach me about all his philosophies about stock market investing, so just to see where he's coming from, because this is a guy that started with nothing and now is worth about $88 billion. So that's a story you want to learn from. You want to learn from all the successful people. You also want to look at the unsuccessful people to see what they did wrong and what you can do differently to make yourself successful in the long term. Now, after about a year of looking into companies this way and seeing how the markets worked and learning about definitions and all this, I started actually looking into companies in depth and actually investing for myself. I started off investing under my parents' supervision, and I first started with 2 shares of Disney stock at the age of 16 in 2017. Now, when I first started, I would look at Disney every single day. I would read reports about Disney, everything like that, and I would keep up with the company. I would see all the news coming out with it, and that's what you should do. When you're looking at companies you own, you always want to look at the news coming out with it, any new reports they come out with, any conference calls, anything like that. You always want to stay on top of your investments. If anything changes with the business fundamentally, you want to know about it right away. So if it doesn't go along with your bullish thesis for the stock in the long term, then you'll be able to get rid of it. Or if you really like the company and how it's doing, and then the stock continues to go down, you can continue adding to your shares and basically increasing your portfolio over time. So this first investment at age 16 in the Walt Disney Company basically costed me about $200 US. And that was my initial investment, and that's what basically got me started in the stock market. And that was basically my only position for about 6 to 7 months. After that, I started looking into companies more in depth. I've been looking into companies, and I finally found something else that interested me. And this money I got from work. And I basically took this money, plowed it into an insurance company, okay, that would pay great dividends, and I saw it as being extremely undervalued in my opinion. So I bought some of that, and the rest is history. So basically I just kept compounding this. All the money that came in from work and all these different income sources, I would plow into the market, and this would just keep compounding my gains. And over time, my stock market portfolio has grown tremendously. The key to stock market investing is basically being consistent. You always have to be staying on top of your stocks. If you don't want to always be reading things about your companies, listening to conference calls, reading annual reports, quarterly reports, watching the CEO talk on TV, that's a big one. If you want to see the theory behind the company, you really want to listen to the CEO. Let's say when they bring him on channels like the CNBC channel, you're just going to want to listen to his philosophy of where he sees the company going in the next 3 to 5 years, because this can ultimately change your view on the company. And if you don't agree with him, then honestly, there's no point being invested in the stock. Basically, you have to trust that the CEO will do what the right thing is. So you always want to take into account how the management team sees the future of the company. And if you don't agree with it, there's no point being invested in the stock, because basically they're handling your money. So if you don't agree with them, they won't be handling it the way you would. So this is always something you have to keep track of. And you always have to keep track of the companies and how they're doing financially and in terms of their fundamentals. If this isn't something you want to do, you can always just put your money in an index fund and let it grow over time. Usually index funds grow about 8 to 9% a year. And over the next 30, 35 years, you'll be able to accumulate so much money that eventually you'll be able to retire just on your stock market portfolio alone. And maybe the dividends of your account are just going to be able to support you for the rest of your life. The point of this video is to let you guys know you don't have to have a substantial amount of money to get started in the stock market. Honestly, the best thing to do is start with no money and just start learning. Just start reading books, listening to mentors like Warren Buffett or Peter Lynch or all these guys that have done it successfully and see what the unsuccessful people haven't been able to do. This way you can learn from their mistakes and carve out your successful future. Starting out with a small amount of money in the market is honestly preferable to starting out with a large amount. When you're starting out with about $100, if you lose 50% of your money because you didn't know what you were doing, you lost $50. If you're starting out with 100 grand and you lose 50%, you just lost 50 grand. So when you're learning about what you want to do and how the market works and how to analyze companies and how to invest in good companies, because not every company is a good company, you'll always find some companies you'll lose money on. It's impossible to always win in the stock market. You'll never have a 100% success rate. No one ever does. So if you make mistakes, which you inevitably will, especially at the beginning, you're always going to want to start with smaller amounts. And once you get more confident in the market after 2 or 3 years, you'll be fully confident that you know what you're doing, and you'll be able to grow your portfolio, and you'll be able to be fully confident in your investment decision. So the most important thing of all is just to start investing. No matter how old you are, I was 15, you can be younger, you can be older. No matter what your age is, the earlier you start, the better. Because the earlier you start, the earlier the compound effect works. And if you guys really want to know how the compound effect works, just go online and search up a compounding calculator and just input some numbers. Let's say you put in $5,000 a year for the next 30 years. How much does that come out to at an 8% return per year, or a 10% return, or a 15% return even? So you just want to play around with that, and you'll really see how the money compounds. $5,000 a year maybe isn't that much, but if you compound it over 30 years, you'll be a millionaire. So you just have to look at how the compounding works and just start as soon as possible. That's the most important thing in the stock market, is just starting as soon as possible and not being too stressed out about it. Just start learning. Learn as much as you can and just start off with small amounts of money. Experiment a little bit. You can lose 50 bucks here, make 100 bucks there, but in the end, it's all learning experience. And once you learn how this game works, it'll serve you very well into your future, and it'll help out your retirement. Lots of fortunes are made and lost in this game, and basically the stock market is a medium to take money from the impatient and give it to the patient. So it's just very important to be patient, take your time, learn, but get into the game. There's nothing better than experience, and experience is invaluable. You can't buy experience. So just get into the market no matter how much money you have, whether it's $100, $500, $1,000, $10,000, no matter how much money you have, just get into the market and start learning. I hope you guys enjoyed the video. If you did, don't forget to leave a like and subscribe down below. It really helps out with the channel if you guys want to see more videos like this in the future. And also don't forget to click that notification bell down below so YouTube notifies you when I release a new video. Apart from that, guys, see you in the next video. Have a great day.